Hello and welcome to another edition of Analyst Insights. We are back on your screen to talk about our markets, focusing mostly on our capital markets. I'm joined today by my colleague Rufaro. It's just the two of us. Welcome, Rufaro.
Thanks for having me, Ranga.
Thank you. Before we get started on the issues that we want to discuss today, I'll just share with you some interesting insights. On your screen, you should be able to see some graphs that I'll share with you. So the first one is the parallel rate versus the auction. So we've been tracking these two for more than 2-3 years now. In fact, since 2020, and you should be able to see that for the biggest part from 2020 up to 2021, they're almost more or less in line with each other. But there's a development that's happening right now where the gap is actually increasing on a daily basis, where the parallel market rate has breached the 3,000 SIM dollar mark against the US dollar, while the auction rate for this week was sitting at 1,404. So it's actually now less than half the exchange rate on the parallel market. And another graph that I also want to share with you, this one depicts the relationship between the parallel market rate and the Zimbabwe All Share Index. So here we're just trying to see how the market has responded to the movement on the exchange rate. And you can see from your screen that the market has actually done very well, where the parallel market rate and the Zimbabwe Stock Exchange All Share Index have actually been very close to each other. I think significantly the big caps, when you look at the likes of Delta, have done very well in trying to just keep up with the rate given the current rate movement. Obviously, long term, they remain very at levels that are much lower than their peak. When you consider Delta peaked at $1.50 in US terms. And another one that I just want to showcase is just looking at the top movers and shakers. There's still some activity on the Zimbabwe Stock Exchange. So those are the statistics for the last 5 trading days, where we saw big trades in Seedco and also the likes of Tanganda and OK. And then in terms of the growth on the markets, where Seedco, Tanganda, OK were the movers, and then shakers were Tena. And then value of trades, most of the money is still going to Delta. In the last 5 days, we saw Delta accounting for almost 39%, with 30% of that going to Econet. The other value traders, we have the likes of OK, Tanganda, and Mikos. And it's probably the right time for us to dive straight into our discussion, Rufaro. The impact of the exchange rate, especially the parallel market rate, the way it's driving even activity on the stock exchange. What are your thoughts on what has been driving the rate? And do you share the view that the market is and how do you see the rate performance vis-a-vis what you're seeing on the stock markets, which is of interest to our viewers as capital market players?
So I think what we're seeing on the power market is simply a manifestation of the dynamic of supply versus demand between the US dollar and the Zim dollar. And I don't think that the supply of US dollars has dwindled significantly over the last few weeks that we have seen the movement on the power market. My intuition is that we have seen a significant increase in the supply of Zim dollars. So the impact it has on the supply demand dynamics is that you have many more Zim dollars chasing pretty much the same volume of US dollars, and therefore you have this price adjustment. And for the players that are institutional, that are highly regulated, that do not have the option of participating on the parallel market to ring fence their Zim dollars against inflation, one of the avenues for them is the Zimbabwe Stock Exchange. And I think that it's exactly the same dynamic at play, where there's just a lot more Zim dollars out there, and yet the supply of shares on the ZSE has not changed, and so the supply demand dynamic there pushes up prices, and this is why we're seeing the all share index of the ZSE track what we're seeing on the parallel market. So what it is what it speaks to is Zim dollar money supply growth, and that is obviously coming from Treasury. And as long as they continue to increase the supply of Zim dollars at this clip, we're going to see devaluation of the Zim dollar on the power market, and we're going to see the ZSC also move up in tandem.
It's interesting because on their part, the Treasury seems to say they have not been printing. In fact, there were reports recently attributed to the PEMSEC in the ministry who are saying since he joined the ministry, they never printed anything. The money that you are seeing on the market is actually part of the revenue collected through different revenue channels for government. And in his view, what we are seeing and what's been driving maybe markets has been the velocity of money, especially when it's given to big contractors. That generally Zim dollars are not sticking around with one recipient. And how would you respond to that? And what does it say in terms of the people's perception, or one of the qualities of money, which is a store of value, the ability for it to be kept in one hand?
So what you're saying reminds me of the words on a placard that they say is all over Google's offices. They like to, and it says, "In God we trust. For everyone else, show me the data." And I think so if we look at it from a historical perspective over the last 20 years, and you compare the assurances that we've received from Treasury or the central bank and what has happened on the ground in terms of the value of the local currency, I think that there is a story of disconnect between the assurances we receive on one hand and what we actually see happening in the market vis-a-vis the local currency. So at this point, I think that if you're going to be objective, we need to discount statements from Treasury and the central bank and just look at the data and review the data and learn from the data, because the statements that from Treasury and central bank of assuring us about how things are going to turn out have, for the most part, not panned out.
So is it your reaction even to the announcement that we're going to revert to a proper Dutch auction? We saw this week the central bank actually announcing that 15 million is going to be available for the auction next week, and there are indications that they want to resort to the actual Dutch auction. Do we have to discount that, or do you have to take them for their word, and what are your expectations on that?
Again, we unfortunately, I don't believe we can take them at their word. There was nothing wrong with the auction as when it was announced, and in terms of how it was going to function.
Okay.
There's just been a disconnect between the way it's supposed to function and the way it actually functions.
Okay.
And so the authorities need not make any statements. If they want it to be an auction, they should just let it be an auction, and it will be clear to everybody that it's now an auction. Because one of the reasons why the parallel market exists, in my opinion, is because the auction is broken. Okay. People who are paying 3,000 on the parallel market if they could pay 3,000 in the auction, they would prefer to pay 3,000 on the auction. Firstly, because it's legal. Secondly, because they would be transacting within the formal banking sector, and they would. So the risk that you send your Zim dollars to a counterparty who then fails to deliver the currency, because if imagine if you are dealing with an individual, even if that person is honorable, that person can get hit by a bus and then not be able to deliver your US dollars. But if you are transacting with a bank, you're transacting with an institution, not any one individual. So you have the comfort and peace of mind that you're going to get delivery. So if the auction was not broken, the parallel market wouldn't exist, because these transactions that we're seeing on the parallel market at 3,000, they would be happening on the auction. There's no need to announce that the auction is now working. We would see it immediately that it's working, because everybody would just migrate from the parallel market to the auction. Okay. So the statement actually to me is speaking to a problem. You don't have to, you don't have to say that this auction is now going to behave like an auction. It's kind of like, if the CEO of a company is chairing a meeting and has to remind everyone that they're the CEO, then there's a problem. And so I think, as far as auction is concerned, seeing is believing, and we are just not seeing at the moment, unfortunately.
So still on issues around announcement from the Treasury and the central bank, another topical issue is on gold tokens. So first, I want you to get your assessment of the gold coin, success, hit or misses, and what you expect in terms of the gold tokens, and also your views on whether it was meant to be an improvement or to make accessibility easier, and this argument that is going to provide a channel for people to store their value in a medium that is stable. How do you respond to those things?
So I think the original physical gold coin was a solution in search of a problem, because the narrative is that money is going onto the parallel market to buy US dollars, because there are no attractive legal alternatives, and therefore if the physical gold coin is available, then all of that money would, instead of chasing US dollars on the parallel market, it would chase the physical gold coin. But the physical gold coin cannot compete with US dollars for many reasons. So number one, ticket size. If you are on the parallel market, you can buy anything from $1 to $1 million. It's very fungible. This is not true for physical gold coins. The ticket sizes are actually, initially they were quite large, and so they priced most people out of the market. And even when they introduced the smaller physical gold coins, they're still not anywhere near as fungible as US dollars. So that's ticket size. Okay. And then the second issue is utility, right? If you have an emergency and you need to pay a hospital bill, you can do that with US dollars. You can't do that with gold coins. If you need to travel to another country, you can travel with US dollars and change them into pullers or Metcash or Rand or Euros, right? It's much harder to do the same thing with gold coins. So in terms of just utility, the US dollar is much superior to the gold coin. And then last but not least is a question of faith and confidence. The issuer of the gold coin has a long history of giving us assurances that have not panned out. So if you are a layman and you're buying this coin, and you don't have capacity to actually discern what the gold content of this coin is, do you have faith and confidence in the issuer, who has been wrong many, many times over the last 20 years? You know, versus the US dollar, which has a track record of being useful. You know, why, you know,
So that is on the coin.
that is the actual physical coin.
Then on the token,
So the token requires...
is it an upgrade or...
It requires a leap of faith, because unlike a physical gold coin, which you can touch and feel, and you can take to a pawn shop and have them assess it, you know, how much gold is in it, and they can buy it off you based on its gold coin. The digital token is basically a bank balance. It's basically, you get a statement saying you have X amount of value. It's basically another currency being issued by the
But this
central
one
bank.
is backed by gold.
It's backed, but you don't, you know, it's not like you're taking the central bank at their word. You know, it's not, you know, if they had created a process, you know, like I think initially with the bond coins several years ago, there was, at least on paper, an arrangement with Afreximbank where there was assurance that the coins that were issued are actually backed up by some real US dollar value. Now, the announcement, what's missing from the announcement of the token is a mechanism to assure the market that there's actually gold underpinning it. You know, if there was some sort of structure involving, you know, one of the big four audit firms and maybe one of the banks, where they would routinely issue reports confirming that they've inspected physical gold and that the ratio of physical gold and tokens outstanding in the market, you know, is X amount, and therefore this is what fair value of a token is. If there was some sort of process that validated the gold token over and above simply taking the central bank at their word, then they would be as good as physical gold coins, you know, but much more fungible. But because that mechanism, that structure is missing, you are taking the central bank at their word. It's effectively a local currency. And unfortunately, over the last 20 years, the local currencies that we've issued in Zimbabwe have lost more than 99.9% of their value over any meaningful period of time. And therefore, if you're going to be objective, this is the likely future of the gold token until or unless there is a open, transparent system where the market is given assurances that the gold is there backing up the token.
Interesting. And maybe lastly, let's talk about the capital markets. We saw another migration. The first capital bank migrated from the Zimbabwe Stock Exchange to the VFEX. Your thoughts?
Look, I think that, you know, by the end of the year, we're going to, you know, the ZSE for the most part will likely be an empty market. I'm of the view that we're going to see a mass exodus from the ZSE to the VFEX. And my view is based on the fact that, according to ZimStats, the economy is 76% US dollars and 24% Zim dollars, and it's trending to be more dollars than more US dollars than Zim dollars. So at a point where that ratio between the US dollar economy and the Zim dollar economy gets to 90% plus, it becomes a legitimate question to ask, you know, where can you actually use Zim dollars? And, you know, so Delta at their briefing last week indicated that, look, there's no liquidity on the VFEX
yes, that was going to be my question, yeah.
Compared to the ZSE, therefore, you know, to serve their shareholders better, they are better off being listed on the
Zimbabwe
Stock Exchange. But if we wake up one day in an economy where less than 10% of the economy is Zim dollars, then the question becomes, when you sell your shares for Zim dollars, what are you actually going to do with them? If you can only do 10%, if you can only engage with 10% of the economy, less than 10% of the economy, so it will then make sense for every listed company on the ZSE to migrate to the Victoria Falls Stock Exchange.
But that market doesn't have liquidity at the moment. So I think we discussed this issue before, that pretty much what's happening, all those counters that are migrating, they're just being parked there. So that's 25% of Zim dollar economy, which is there, is actually able to drive activity on the Zimbabwe Stock Exchange. Yet the 75% USD, which is in the economy, it doesn't find its way on the Victoria Falls Exchange. So do you expect that to improve, and what needs to happen?
So I the way I think about it is 2023 is analogous to 2009. When the market was reopened in February 2009, there were very thin volumes because most people did not have access to US dollars. In fact, civil servants at the time were not being paid in US dollars. They were being paid in coupons, which were redeemable in supermarkets and that sort of thing. But by the end of 2009, the liquidity of the US dollar improved significantly, and you saw decent volumes on the ZSE. So I think where we are is similar to February 2009. We are in this transition where we're dollarizing again. In February 2009, there were no Zim dollars anymore. There's still quite a lot of Zim dollars today. So it's early days. But I think when the ratio of the economy gets to 95% USD versus Zim dollars, I think the volumes will start to thin on the ZSE, and we'll start to see the volumes improve on the Victoria Falls Stock Exchange. So I believe it's going to take 6 to 12 months at the rate that the Zim dollar is devaluing and being less useful.
Thanks so much, Rufaro, for those views. And to our viewers, we want to hear from you. What do you think will happen to our capital markets in the next 12 months? Do you agree with Rufaro that we are likely to see an increased liquidity on the Victoria Falls Exchange, and maybe a dying of the Zimbabwe Stock Exchange? Or maybe, given the policy position that the Zim dollar will continue to be in existence and to be supported, we should see a resilience of the Zimbabwe Stock Exchange, which is a Zim dollar market. Maybe I would pose a question. Do you think it makes sense even for the authorities to make the US dollar a transacting currency for the Zimbabwe Stock Exchange? If that is the case, what would happen to the Victoria Falls Exchange? So there's so many questions that you could ask. We don't have the answers, but we all want to see our capital markets develop, and for us to have an investing culture again. Thanks so much for watching. See you next time, and bye bye for now.